I know some of us must have seen that story yesterday that said Nigeria will borrow 1.2 trillion naira bonds in the first quarter of this year. We've also heard that the Nigerian president, Muhammadu Buhari, is pushing lawmakers to let him add unpaid $50 billion overdraft from the central bank to the country's public debt. So while the minister is assuring us that there'll be no borrowing or not excessive borrowing from the domestic front, we are hearing this. But let's get someone who we know understands some of this and can help us to understand that. We have Mr. Bismarck Rewane, Chief Executive Officer of Financial Derivatives Company, joining us virtually from Victoria Island. Mr. Rewane, good morning. So on the one hand, we hear the minister saying that they're working to make debt-to-revenue ratio come down from 80 to 60%. On the other hand, we have 1.2 trillion bonds for first quarter of 2023. We hear $50 billion debt. And I mean, it's just so worrying. Help us to understand the true picture from your perspective.
Good morning, Ine, and good morning to viewers. First of all, let us understand something. No country pays off its debt. What you do, you refinance your debt with new issues. So the 1.2 trillion naira bond issue program is probably going to be used to redeem some of the existing debt. So it's more or less a reissue. But it's important to note that what is the debt profile of Nigeria today? And you talked about the debt to revenue ratio. If your revenue is growing at a rate slower than your debt is growing, then your debt to revenue ratio will always deteriorate. And also, it is clear that the borrowing profile of Nigeria 10 years ago and what it is today, the trend is quite worrying. Because one, it's growing. Two, we are not able to, there's been no increase in productivity as a result of this borrowing. And on the asset side, we cannot point to the assets that we've used the borrowing to achieve. Power supply was 3,000 megawatts before, it's still 3,000 megawatts thereafter. The growth is still suboptimal. So that's the important thing. Now, what to do with the new money, if you are raising the money? One is to retire existing debt or refinance that debt. And two is to use it mainly for capital projects and also to look at, one, the deficit of the budget this year and the capital projects for the development plan. That is what this debt or this issue is going to be addressing. But again, you must realize that there are four components to our debt. There is the domestic debt funded by the Central Bank of Nigeria, which is the Ways and Means securitization issue. Two, there's domestic debt funded by the markets. Three, there's international debt funded by multilateral agencies and concessionary loans. And four, there's the private sector debt, international debt, which is called the London Club. You can see that. So if you look at the Nigerian debt profile, it is becoming much more critical and we are becoming more vulnerable to our creditors. And only this morning, Ghana announced, because once your GDP per capita is above $2,000, I think, you no longer qualify for concessionary loans, right? And therefore, a country like Nigeria, in going to do its rescheduling, which it will do after this, when the new government comes in, we'll have to make a provision for that. And the minimum time between when you start the negotiation and when you close it, if you are lucky, you close it in 1 year. Because the conditions are onerous and they're very tight. So what are we going to see? We are going to see the securitization of the Ways and Means advances to 22 trillion or 23 trillion. We are going to see these issues which will be used to finance debt. And what will happen to push up interest rates significantly in the domestic market, bring closer to inflation. Three, we are going to be engaging with our international creditors, both at the multilateral level, that is the IMF, the World Bank, and then also we have to engage with the London Club of Lenders. So it's a very high hurdle and a big task for whoever has the misfortune of winning the election.
Mr. Rewane calls it misfortune. Well, the politicians who are campaigning don't see it that way, so I do hope that they have the answers. But let's bring it home to households, for instance, impact on disposable income, whether it's at 60% debt to revenue ratio or 80%. What are the implications? What does it mean?
Well, you say debt to revenue ratios. Again, like I said earlier, if your revenue increases because oil theft has been brought down, because you have liberalized your rules so that money, both illicit and legitimate financial flows come into the pocket, things can be better. What we've seen is that the more draconian your rules are, the more monies bypass the normal corridors, and the less the economy benefits from the integration of the Nigerian economy with the rest of the world. So I suspect and I believe that we are going to see a liberalization of policies. We are going to see a much more efficient management of exchange rate mechanism, money policy, and all of that. Everything driven by the fact that we have to come to some terms with our creditors, not because anything else, but just because of that. And I think that will make things better. The government announced, I think, this morning that the subsidy reduction stroke removal policy will start in April this year. You recall that it was April 1st, 2020 that we started the lockdown. So again, fast forward 4 years, we are here. That's 2020 to 2023. We'll be dealing with another April Fool Day, which is dealing with the subsidy removal, and that will help to a large extent to remove part of the distortions that you're seeing today. So generally speaking, the government, that is this administration, is going to be laying the foundation for the next administration to work on. So the hard decisions, the difficult choices are going to be made probably anytime between February 25th and May 29th, and the rest will be carried on by whoever comes into office.
In essence, Mr. Rewane, you do see this promise of the minister that they will be able to cut down the debt to revenue ratio to 60%. You see it happening before the end of this administration?
No, that's a wish. But it's that Shakespeare said, if wishes were also beggars would ride. So, I mean, it's a wish. If we've been there for the last 8 years and we didn't do it, what will make it happen in the next 8 weeks? So I think that she's setting the tone. She's saying the right things, and not to get creditors worried about it. I know for sure that Nigeria is not going to default, as I said. I know that it's a tall order to issue 40-year paper at 9% per annum with a 3-year moratorium. I don't think those things will fly. The reality is the market will determine what the real price of our debt is, and the market will determine where we go. But if the productivity and the growth increases, then naturally your revenue will increase and your debt service as a percentage of your revenue will actually decline. So it is wishful thinking, but it's also possible. And it will be done as long as you can make sure that you achieve growth rates in excess of 3, 4, 5%, which is possible and doable in the near future.
All right. Thank you so much, Mr. Bismarck Rewane, for sharing your perception. We always appreciate your time and your perspective. Do enjoy the rest of your day.
Thank you for having me.